Hello friends. So although you are our investors, I can say it now by friends because we are discussing almost every 3 months for last couple of years. So every time I find many participants who are very diligently attending all the conference calls, and of course every time I find some new faces also, which really shows the dynamism and dynamics of our stock trading into the stock market. Thanks to you all gentlemen and ladies winning for your continued patronage and confidence and trust in our organization. And as you might be witnessing by our disclosures, by our statements in the stock markets or on the social media, so you must be finding, yes, we're a dynamic organization having lots of new things happening every month, every quarter. New energies, new plethora of situations are emerging. Of course, there are new challenges and new difficulties as well. So, but nevertheless, I always believe that difficulties have to be converted into our strengths and threats have to be converted into opportunities. This is the basic dynamism of management. So nevertheless, I thank you once again for joining this investor call. And as usual, our practice, first CFO will run through our presentation and then followed by questions and answers by me, Prab and Paul. If there are still any unintended things, definitely we'll respond to emails. Yes, over to you, JJ. So you can, you're going to run the presentation?
I will.
Prab will run it?
I will run it.
Okay.
Evening, everyone. As my name is Jitendra Jain, and I'm the CFO of the company. Can you move to the next slide? So thanks a lot, everyone, for joining the call today. I'll run you. So this is an important slide. We present it every time, but still, for if someone is new, so I just want to focus on this slide a bit. So we started in 1983. We are a more than 3-decade-old company. Our FY23 revenue was close to $45 billion. And our overall strength of employees as on-roll employees as on 31st December was 599. As far as the product applications are concerned, we have around 22 active customers and more than 900 plus SKUs. Our product applications are in two-wheelers, three-wheelers, passenger cars, commercial trucks, ATVs, agriculture equipment, and industrial gears. Our corporate office is based headquartered at Noida, Delhi NCR. We have 2 manufacturing locations, one at Gajrala and one at Noida. We have 1 corporate office and we have 3 warehouses in Europe. Our product range, it spread across transmission gears and shafts, sub-assemblies, precision machine parts, chassis parts, and industrial gears. I take pride in sharing that we are a credit rating, A- credit rating by CARE, listed on Bombay Stock Exchange. And we have 1 subsidiary, 100% subsidiary, which is based at Austria. Basically our core competencies, if I come in, our core competencies are precision machining, gear cutting, process R&D, laser cutting, laser welding, sub-assembly, heat treatment. So we have all these processes are in-housed under 1 single roof. And we have all the ISO and other company certifications which are required for running a plant in India. Next one. So I'll come to the quarterly results for Q3 FY23-24. So I'm happy to share that in Q3, we have achieved an overall turnover of 115 crores, 115.36 crores in Q3, out of which exports was about 85.82 crores and domestic turnover was close to 20 crores. So our segment sales, if I talk about, so exports are almost now close to 75% of our overall turnover, and domestic is about 25, a little more than 25%. Now this percentage, if we see quarter on quarter, this percentage is slightly being driven towards the export side. But that doesn't mean that we are not growing our domestic business. Our domestic business is also growing. But if I may say, the percentage of growth on the export segment is slightly higher as compared to the domestic side, basically. Next one. Yeah, so this is basically YOY comparison of Q3 results. So we have achieved 115 crores of turnover as against close to 100 crores of turnover in Q3 same quarter last year. So a growth of about 15%. And if I talk about EBITDA, so EBITDA margins, we have achieved about close to 29 crores of EBITDA in absolute numbers, as compared to 26.56 crores same quarter last year. So which is a growth of about 10%. If I talk in percentage terms and all, so closely our EBITDA ranges between 23 to 24.5% range and all. And if I talk about PBT, so PBT we have achieved about 16.94 crores as compared to 16.23 crores same quarter last year, which is a growth of 4%. It was predominantly because of higher depreciation, which has been there as compared to the same quarter last year. Next one. So this is a YOY comparison, 9 months comparison, 9 months of this year as compared to the 9 months of last year. So FY23-24, we have achieved an overall turnover of 308 crores in 9 months of current financial year, as compared to 271 crores, close to 271 crores last financial year, which is a growth of about 14%. But I'm happy to share that our EBITDA margins EBITDA has grown to 77.47 crores as compared to 67 crores in 9 months last year, which is about 16% growth. In percentage terms, it's slightly higher. So last year it was about 24.75%, and this year about 25.12% in 9 months, basically. And PBT has grown to 42.21 crores as compared to 37.46 crores of 9 months last year, which is a growth of about 13% this year. So our PBT generally ranges between 13.5% to 14% range. This is basically actually a quarter-on-quarter comparison. So Q1, Q2, Q3 turnover, we have grown from close to 90 crores to 103 crores to 115 crores, which is a growth of close to 12 to 15% quarter-on-quarter. If I talk about EBITDA margins, then it's from 23 crores to 25 crores to 29 crores, which is a growth of 9% and 16% respectively, quarter-on-quarter. And PBT has grown from 11.65 crores to 13.62 crores to almost close to 17 crores in current quarter. So which is a growth of about 17% and 24% respectively, quarter-on-quarter. Now coming to the latest developments, basically latest business update. Next one. So this is a matter of pride for us. So for the first time, we have been nominated as a tier 1 supplier for the passenger car segment. I would request Mr. Prabh Meher Singh to just take us through this achievement. Prabh, yeah. Over to you for this one.
Yeah, can you hear me, JJ?
Yes, we can.
Yeah, so hi, good evening, everyone. Please mind my bad throat. But we are very pleased to inform, and of course, you already know through the disclosures what we said. Oops, go back. Yeah, so through the disclosures, what we sent. So we have been nominated for the, so as you know, we are working for the PAS car through ZF, and we are working as a tier 2. Working tier 1 as a company based out of India for any car manufacturer outside the India is a dream, or maybe a very difficult aspect for many of the companies of our size. This is the project which we have received from one of our new customer, which we have added. So the customer is going to launch an electric sports car. So they do have the sports car in their variant, but it will be fully electric, which will be coming in 2027. So this is a completely new platform which they are launching. And I'm very pleased to inform you that we have been nominated not for a subcomponent. Usually we are a component manufacturer. We have been nominated for an entire subsystem. So what this means is we have to make this spark lock mechanism. This spark lock mechanism, as you can see on the right pictorically, is a locking mechanism. So if you have driven automatic car which has automatic gearbox, there is sign for P. So when you put your car on the P, or if there are any electric handbrakes, the car doesn't move. So this locking device or the mechanical device is placed in such automatic transmissions which prevent unintentional rollback of the vehicle when the vehicle is brought to a stop. So this mechanism, the customer will not be by only the complete, not only the part, but the entire assembly. So this is having, of course, the gears, but there are a lot of new technologies like a pressure die casting or aluminum parts, which we have to assemble, and the customer has to just mount it into its vehicle. The platform, what you see on the left, so right now, of course, this is confidential, but the customer is launching a new platform which has a different technology to run these drive, which we can't disclose. But for us as a company, this is the first time we are going to work for a tier 1 supplier, as a tier 1 direct supplier to a pass car company. We have been eyeing this business for a couple of years now. We have been working very hard to achieve this. There were certain requirements which in any case we are meeting, not for them, for other customers. The first was to be having a fully sustainable manufacturing. So we had to be green compliant. So as you already know, our Gajraula plant, where this manufacturing will happen, is 100% running on green electricity. And then there was very rigorous audit on responsible business sourcing. So they audited our HR systems, they audited our many aspects other than the costing and the quality pertaining to the human systems, the way of handling of work, the overtime management, the IT digital system, the IT securities. There are many things what many Indian companies of our size are not achieving, but for them to happen, we have done a lot of hard work there. The SOP will start in 26-27. So it means for next 1.5 years, we would be working very actively on sample development. We would be doing 6 series of rounds of sample development before the part is assembled into the vehicle as a fully launched car. The total lifetime order value for the project life, which right now is 7 to 8 years, from 26-27, is roughly around $38 million. So we would be working closely with the customer for next 1.5 years in active sample development of this activity of the project. And this again would open doors for many further business opportunities from the similar customer and for other car manufacturers as well, because working directly as tier 1, not many suppliers have that, at least from India, that privilege. And also this company or this customer of ours, which we can't name due to confidentiality, we are going to be the second supplier from India to work for such platform, for electric platform. Of course, this is the start of the business, and we are very confident that this would actually change the approach of the company from 500 to 1,000 journeys. So I would say the milestone, the foundation stone has been set through this project, and looking forward that how we are able to grow this vertical and this segment into a fully bigger business opportunity. Yeah, JJ.
Thank you, Prabh. Thanks. So friends, it's a auspicious day for us today. So we have finally formally inaugurated our plant 2 at Noida. We had declared during our last presentation that we'll be shifting to a bigger location within Noida, from an existing plant to a bigger location. So today we have formally inaugurated the plant. This is the new plant which is there, which is already ready. And it was a matter of pride that one of our premium German buyer, they were physically present today for this inauguration. So today we have inaugurated our Unit 2. Just to give you a glimpse of what Unit 2 is all about. Go to the next slide. Yeah, so this Noida Unit 2, this was a brownfield expansion for us. So it is almost 1.5 times of our existing plant which was there. So about the existing plant was about 11,000 square feet, and this is close to 26,000 square feet. This is in hub of Noida Sector 80, which is just 30 minutes away from the dry port. It is equipped with all clean room, and it has and I take pride in sharing that we still have vacant space available for expansion. So this plant has been taken with the futuristic view. If I talk about capital, so about almost close to $1 million of investment has been done. And as we had shared last time, that from this new unit, which this will be the first export order for the electric bicycle project, which we will be executing from this particular plant. So this will be the first export order. Till now, from our existing Noida unit, we were catering to only domestic demand. But this new electric bicycle product will be exported from this new plant. If we talk about manpower, so we have almost doubled our manpower there from 120 people to close to 250 people who will be employed there. It's a highly skilled manpower which is required, and the location is near to the special economic zone which is there. And it's a dedicated project, and basically, we have an NPD team to reduce queuing and ensuring the on-time sample development. So we have deployed a highly skilled manpower there because as we will be catering to our first export project from there. And if I talk about the certifications and all, so we have already taken, we have to take the ISO 14,000 and other certifications, which we will be taking in a span of next 1 year. And we have also planning to set up the barcode traceability system for the internal WIP movement there. So
just to add one point more, Gigi. So on the man side, so I think this is again one of the questions somebody asked maybe a year back. So of course, our right now, what of the growth has come through our resources. When I say resources, people. So we are a very highly skilled job-oriented company. So a lot of effort and time goes in project development and sample development. So of course, there is then a bandwidth concept that if you're growing at one location, does it mean that then that becomes a bottleneck? So this is again one of the debottling activities. So here there is a very professional and a strong technical team which will take care of, suppose, this new electrical bicycle business. So this has come from one of our existing customer who has acquired this bicycle manufacturer. So their first point was, our existing business is also growing. So do you have the appetite to get into something else and make that grow as well? Because this bicycle market, the competitor to our customer is doing maybe 2 million bikes a year, and they are doing only, I believe, I can't give that number, but they're doing a very small number, and they have plans to grow. So then this, of course, is one of that aspect or one of that strength that now there is a dedicated team which will be duly supported by Gajrala, but at least these people will have this as a full-time task. So this can always become a different profit center, and then it will grow as a group turnover for us to be enabling more, as they say, more arms to grow more faster. So this is how this new project team and the introduction of dedicated team for certain customers will help us grow parallelly, not at one location, but multiple locations.
Sure. Thanks, bro. Thanks. So yeah, so the second update is, so we have the company, we have, as you all are aware of, that we have a 100% subsidiary based at Austria. So I'm happy to share that we have taken a new warehouse on rent at Austria in our 100% subsidiary, and we have entered into an understanding with our existing customer KTM Austria, where we will be providing additional value-added services, including warehousing, to our 100% subsidiary. Now, please note that currently we have been supplying to KTM Austria from India, but there has been a request from KTM side to provide a just-in-time supply to them. So that is the reason. In fact, that was the reason for setting up a subsidiary in Austria. Now I'm happy to share that we have already taken a warehouse and a formal billings have also started. So the process is that RACL India will be supplying goods to RACL GmbH, which is my 100% subsidiary, and who will in turn be doing a small value-added services there, of course warehousing and some small value-added services, and then they will be supplying as a local invoicing to KTM Austria on a weekly demand basis. Now this will help us in getting, first of all, we will be able to provide that just-in-time supply to our customer, and of course with the presence in Austria, it should also help us to get business from other clients as well. Just to share that there is no compromise on the margins which have been done in this. So the RACL India will be supplying goods to RACL GmbH almost at a similar rates which we were supplying to the KTM Austria.
I'll add what
Yes.
JJ has told. First of all, on this value-added service, so of course, RACL GmbH Austria will also gain some profit. So we got additional revenue opportunities from Austria. That is one tangible benefit. There is one more intangible benefit. One way we have now killed competition from India for our product export to KTM, because not many manufacturers of our size can offer ready-made solutions for warehousing, that too in a land 7,000 kilometers above. So as a company, RACL always believes in putting first foot forward and do something which competition is not doing. So that way we have killed our competition, at least for, I will never use the word forever, but yes, for a very, very long period, because overseas buyers don't take their decisions to change any alternate competition and all on any minor grounds. And now this warehousing has really given us such a strong upper hand in our this current business that will always be beneficiary out of this business. So this is also one of the intangible benefits which you have got. Yes, DJ, you have got it.
Thank you, sir. Thank you. Next slide. So yes, now another feather in our cap, I would say. So our Gajrala plant, as we have disclosed, has achieved 100% green energy compliance. So if I talk about the breakup right now, so currently almost 94% of our requirement at Gajrala plant is being catered through electricity from electricity board, which is 100% green energy which is being supplied by them, and we have got a certification from them. And about 4% of our current consumption is being generated through our renewable solar rooftops, through which we are generating about 1.2 megawatt of electricity as of now. We are happy to share that we are at a location where there are hardly any power cuts and all. But yes, if there is some emergency, there is some power cut and all. So about 2% as of now is through DG sets and all. But going through from April, from the next financial year.
No,
yes.
I think it's a mistake. Sorry.
Achha.
This backup will always remain.
Backup will always remain.
Because if power fails, so sun god is not there in light. So
Okay.
it's a small error. So
Okay.
I don't know. I think it's a drafting error.
Understood.
Backup power will always remain.
This 2% will always
2% will always
2%
remain
will always remain.
until Power Corporation stops making power cuts.
Understood.
In daytime you can still use partly your solar power.
Yeah.
But in night time, if power cut is there, power cut is not there. So this 2% will always remain.
Understood.
So you have to correct this.
Understood. Understood.
And
Sorry.
one more thing actually on this paper. We are a green electrical energy company. We cannot say green energy.
Okay.
Because LPG also is energy.
Okay.
But that is not a green So we are now, as on today, 100% green electrical
energy. Okay.
And backup is always there.
Okay, understood. So my apologies for
this correction.
We'll make these. So as we had declared last time, we had already taken a captive solar power, which we will be taking from a solar power plant, which supply is expected to start from March and or April onwards. So which is about 4 megawatt, which we will be taking from them. So once that will start, then about 54% of our requirement will be served through the electricity from electricity board, and about close to 35% will be through this new solar power plant, from which we have taken the captive. We will be the captive user for that plant, and close to about 9 to 10% will be through our renewable solar rooftop generation, which will be catering for our plant requirement. Again, one of the accolades for us, we have also already disclosed it. So it's a matter of pride for us that we have won the first prize in the category of engineering and builders hardware for the highest export performance for the financial year 22-23 from the state of UP. And this award was conferred by Department of Micro, Small and Medium Enterprises and Export Promotion, Uttar Pradesh Government of India. So we had in financial year 22-23 in the engineering and builders hardware category, RACL was the highest export. RACL was the company which has done highest exports in that financial year. This was again one of the premium event, which is basically organized by BMW Motorrad. So RACL Geartech Limited, we take pride that we were one of the title sponsor and official partner for 2023 BMW GS Trophy India qualifier. This event was in partnership with BMW Motorrad. This event was exclusively for BMW GS motorcycle owners, and this event has been going on since 2010, and it has gained a lot of global recognition from the time it has started. This year, around 22 teams with a total riders of almost 60 around the world has participated in this competition, and RACL was one of the title sponsor and official partner for this event. These are the few.
And to add what you said, GS model has a lot of components also from
RACL.
It's not only we have sponsored it. In fact, it has vehicles were running on our gears.
On our gears. Okay. Now, as a future-looking company, we have been focusing on exports. We have been focusing on value addition. We have been focusing on being tier one. We are focusing on sustainability, and one more thing, we have been focusing on digitization. So again, I take pride in sharing one of the efforts which we have done now. Now our HRMS application, it is completely online for all the employees across RACL. So we have launched our own app, which is available on both App Store and iOS, and all are again to contribute to the sustainability and all. So it will be a completely paperless mechanism now for all the leaves, which till now were being done on paper. So we have launched our HRMS application, and now so it is available on both laptop and in the app URL and app form. Secondly, we have also to ensure a paperless company, we have also started online production monitoring now. So will you be able to explain?
Yeah, probably listener.
Prab, can you explain this part, please?
Yeah. So can you hear me?
Yes, we can.
Yeah. So basically, if any manufacturing needs efficiency and a lot of data to be analyzed and reported, we do a lot of this activity manually, wherein 8.5 hours is what the operator comes to the shop. What has he done in that 8 hours? Like in IT, you have timesheets. We have these job cards. So they write that if, let's say, part A requires 100 minutes to be made, so how much parts did you make in those 100 minutes? And if remaining there was any issues, let's say breakdown, absenteeism, quality issues, so you report it. And then basis that, the question what you ask us in many of the calls, what is your utilization, what is your efficiency. So all of that happens a lot manually. There are errors, of course. So now we are moving to digital, wherein we have introduced tablets on the shop. So each operator has its own face mapped. So then they have to give that data on the tab. Earlier, which were they filling manually. And then what you see on the bottom right is the efficiency report. So as a shop manager or the production in charge is then after every shift able to understand the losses, the areas where what you call improvement is required. And this at a management level, when you are running the plants through professionals, through virtual equations. So these dashboards then also come to us in terms of plant efficiencies. We were doing this from a year and a half, but there was still an interface which was manual. Now we have eradicated for the newer plant. So the Pascar and the other plant, if you understand the nomenclature, Ojas and Shakti, there we have introduced this, and we would then do this vertically across the shops. On second, of course, as you all know, a lot of people are doing things on internet. So it is called Internet of Things or the smart factory or the IoT, what it's called. So the machines have individual sensors which are attached to the PLC of the machine, and then real-time data we get on each clamp, declamp of the part. Again, it is for better efficiency and report monitoring. So we are upgrading ourselves, not on the part family, the sustainability, but on the technology, on the efficiency monitoring and other lean management concepts as well. This is what I think this slide we've tried to put in to give you a broader idea of how the operations are being run. Yeah, JJ.
Yeah, thanks, Prabhu. Thanks. So thank you. That's what it from our side. Rohit, over to you.
There is any, we will put any question and answer. If anyone has any question, you can put your hand.
I will try to moderate that, Rohit. But only thing is, do we have some pre-registered questions? JJ, maybe you can take that first.
Yes. So we'll take the pre-registered questions first.
So
open Anirudh.
Who is Anirudh?
Anirudh. Right? Anirudh.
So I will unmute Anirudh and then we can ask him or allow him to ask. Anirudh, I've unmuted you. If you have questions, please keep it 2 questions and please ask.
Okay. Thanks for the opportunity. I'll 2 questions, and I have a couple more, but I'll just join back in the queue if time permits. So just congratulations on the parking lot mechanism opportunity. I've gotten a sense of the size of the opportunity, but if you could elaborate on, in terms of just the complexity of the product and how does the profitability of this product compare, to vis-a-vis our existing portfolio. And now as we are winning new orders, the visibility improves. So is there any change in the capex plans at a company level? Because earlier we had alluded to 350 crores over a rolling 4-5 year period. So is there any change in our capex plans due to this, due to better visibility with our customers?
Yeah. So Anirudh, I will answer your question. First of all, you asked regarding complexity of parking lock mechanism. So although we should have not been showing this picture, but investors are our close family, so we really showed you a picture. But from the picture itself, you can make out it's a very, very complex product, which involves really very high-end engineering. And obviously, it's a challenging project. And as far as value is concerned, since we are bound by confidentiality, so we are not really allowed to speak on the numbers and the value, the volumes. But you can just make it that if it is a European car buyer, so it's not a nominal number, it will be high volume business. So of course, you can make out it's a high value added business. It's a complex business. It's a high value added business. As far as capex is there, you have already seen that for next year, we have already announced our capex plans for 2025 in our earlier disclosure, and we'll maintain that. And while announcing that capex, we already had kept in mind this particular business because Prabhu already explained to you that this business we are discussing with the customer for last almost 1 year. So, and we were seeing the winds blowing in our favor, so we already kept some cushion. And secondly, whatever investments of this project for mass production will happen, this will be in coming years. Because you know this electrical car business has a long gestation period because it's a total greenfield project. Greenfield project means this total passenger car platform is totally new. So customer is not greenfield, but the platform is totally new. So actual mass production has to start somewhere in 2027. So the real capex will start happening in coming years. This year, our capex plan, which we have announced, we are going to hold on those capex plan on. I hope I have been able to clarify both of your questions.
Yes, sir. But I just wanted to clarify. So, if we're spending 90 crores in 2024 and 60 crores in 25 ballpark, so the run rate that you are referring to beyond 2025 will be more like 60 crores, which is what we might incur the next year. Is my understanding
No,
right?
actually, we have said for 24-25 is 60 crore and 90 crore, 85 crore, not 90. I think 85 crore was for 23-24. So for these 2 years, we have announced this 90 plus 60. For coming years, of course, once the 25-26 numbers will be there, we'll obviously share with you. But right now, we can't share those numbers.
But just to add, Anirudh, one more point I think we should have mentioned in the presentation. So this year's capex budget, I think this is the first year wherein we are actually reducing the debt. So our repayments are going to be higher than the money what we raise. So maybe JJ, we can also.
Yeah.
Yeah.
No, so Anirudh, just one more clarification here. The 60 crores of capex budget, I think if you would have read the 15 out of that 45 crores is the regular capex. 15 crores we have taken as a contingent capex budget, subject to any prepayment of capex of next year or any new order. Which of course this new one has already come in. But to what I can share with you is that the debt which will come on the books, that long-term debt which will come on the books due to this capex will be lesser than the total repayments which are due for next financial year.
So technically, our debt will reduce for the first time.
Yes, the overall debt will reduce, long-term debt will reduce for the first time. Tentatively, that is the philosophy which we would want to keep going forward. But yeah, this is the maximum comment which I can make right now.
Okay, maybe I think now you can unmute Siddharth, Mr. Siddharth.
Mr. Siddharth Thakkar. Is Mr. Siddharth there?
Maybe. Yeah. Okay. Siddharth. I'll check. Siddharth. Yeah. No, he's not attending. No.
He can join. Okay. So next is Mr. Prateek Kothari.
Prateek, yeah, he has a hand raised. Yeah, sorry.
Yes, Mr. Kothari, good afternoon.
I have to still allow him. Yes. Now you can good afternoon him.
Yeah, hello, Kothari ji, good afternoon.
Prateek, you can unmute yourself. You're on mute.
Yeah, Mr. Kothari.
Prateek, unmute yourself. I've allowed you.
Hello, Mr. Kothari, can you hear us?
He's on mute.
No, he's still on mute.
Yeah.
Maybe I disable the mic and try again. Give me 1 second.
Yes, Mr. Kothari, please unmute yourself. Hello?
I think some issue in his mic. So maybe we can come back to him later.
Next, Mr. Pranay Roop Chatterjee.
Yeah, I'll unmute him.
Hello, Mr. Chatterjee. Good afternoon.
Mr. Chatterjee, unmute yourself. Yeah.
Hey, good evening to all. Am I audible?
Yes.
Yes, you are.
Yes, please.
Hi. Thanks, sir, for giving me this opportunity. I had a couple of questions. Firstly, I think couple of till about a couple of quarters back, we had given a guidance of around 20 to 25% growth over the medium term. Last quarter, I think a couple of orders had slowed down, and you had said that there was some temporary issues, and hence, it's temporary in nature. So if I were to look at all these statements, and also the growth of 20 to 25% was supposed to be driven by new segments like passenger vehicle, which is the ZF business, and your man trucks business, and your EV two-wheeler business is scaling up. So my question is, do we still have a visibility of this 25% growth number if I were to speak about both FY25 and 26? And how is the progress with the scale up of the ZF man trucks and your EV two-wheeler businesses? Is it as per your expectation?
I think, Mr. Chatterjee, for 2024-2025, we have already announced a budget of 548 crores in our recently last concluded board meeting, I think on 7th of February. 7th of February. So that answers your question by itself that this year turnover you can already make out. So eventually there is a growth plan of 20-25%.
More than that.
And when we are targeting an investment of another 60 crores in this financial year, our business model is that whatever investments we are making, this is always for future years. This 90 crores which we have invested this year, this will be catering to our production requirements of 24, 25 and onwards. The investment of 60 crores which we have planned to do in 24, 25, eventually it will be utilized for mass production 25, 26. So you can say that in short term of 2 years, there is a real visibility in line with our projection. So far business is going stable, business is going smooth. And one thing is very clear that no business will always keep on growing. There will always be certain headwinds one has to always face. And sometimes there can be seasonal issues, sometimes there can be geopolitical issues and all sorts of things. But we are actually lucky one, or our business strategy is very well thought business strategy that we have 22 active customers, and we are into literally every segment of mobility, right from two-wheeler of 100cc to a 49-tonner truck, right from an off-road vehicle of ocean or off-road vehicle for sand or off-road vehicle on the snow, we are there. For agriculture machinery, for tractors, we are there. So, we are an omnipresent company. So all segments will never go into recession mode. All segments will never go into decline mode. One segment grows, one section declines. That's the reason we always maintain our growth plans. And to conclude your question in clarity, then projections for 24-25 we have already announced, so it's a public document. But 2025-26, you can just draw the numbers. If you're investing 60 crores, obviously those kind of growth plans will come in coming years also. I hope I have been able to clarify you.
Sure, sir. That is clear. Just one quick follow-up before I move on to the next question. Since you mentioned that you said that you have already come out with the growth number for this year, and hence the associated capex is 80 to 85 CR, and then you're reducing your capex next year. So does that mean that the incremental growth is lesser next year? I'm just trying to clarify that part.
No. You asked a very, very intelligent question. In past 3-4 years, including this year, we were investing not only to the capacity expansion, we were doing a lot of investments onto the infrastructural improvement and also replacement of legacy equipment. Plant has also gone 35-year-old units. So in past 3-4 years, we have done major investments in that area also. Technically, those requirements have now almost finished because our infrastructure improvement activity has finished totally, like we might have disclosed in earlier Concalls that we invested almost 25 crores rupees in 2 years only for housing colony, housing campus for our engineers and managers. Now that investment is done once and it will be now suffice for at least next 10, 20 years. So those investments are not now required in future. Same way we have to invest about 4-5 crore rupees on our electrical system upgradations. 5 years back, our company was using only, I think 1.5 megawatt of power. Now we are using 3.5 megawatt of power. And we are expanding our electrical infrastructure further by additional 1 megawatt. So we'll be 4.5 megawatt power consumer now. So technically in short span of 6 years, we have increased our capacity by 300%. But eventually once this installation is complete, now we'll be able to utilize this for next couple of years. So these investments requirement has come down. Now the real investment will happen only on plant and machinery. Thankfully, we have not to invest anything on land because we still have about 10 acres of land. So when you say that overall investment has gone down, it's not that our requirement for capex has reduced. Our requirement on investment on infrastructure and replacement of legacy equipment has by and by finished. So this is the justification for that. I hope it is clear to you.
So that is absolutely clear. That makes sense. My last question is...
Can I have one last question, please? Yeah.
Sure.
Yeah.
My last question is essentially trying to understand your diversification strategy. So recently we have, over the last 3-4 years, we have added products beyond our traditional gears and shafts. For example, the recent Park Love order, right? It is fuel agnostic in nature. Then the ZF product that you have, electromechanical roll control, that also is essentially by function, it is fuel agnostic in nature, right? So, and I think the same thing could be said for probably the KTM rear axle order. Incrementally, if I think about it, strategically, are there enough parts or components within, let's say, two-wheeler or PV luxury or premium space, which meets our high precision requirement? Because we have those equipments, we need likewise margins, right? So do we have enough of those such components beyond gears and shafts to continue to scale, which are at the time meet your margin and the fuel agnostic in nature?
I'll tell you, it is a very, very brilliant question. In EV particularly, complexity of machine component is increasing like anything. Because first of all, we are lucky that we are a gear maker. So no EV is without a gear. So our business will never go down the history. Gear will always remain. Barring some EVs of which are 100cc and below, because they are direct driven EVs, but I don't really consider them as a real EV. But actual EVs are having lots and lots of gears. So first of all, gear business itself is there in the EV. But in EV, there's a huge scope for machining, because when you say battery, can you imagine the kind of machining is required for creating a electrical battery console? It's a huge machining, because in EV, the weight reduction is becoming a very, very big challenge. And people are now, because all the vehicle manufacturers are shifting to non-ferrous, to aluminum, to titanium, and even to magnesium, and so on and so forth. And when you use die casting, then forging, so eventually the weights are always higher. So precision machining has a lot of scope. Just to give you a small example, it's not influencing any numbers. There is a typical footrest on one of our customers' two-wheeler. Footrest is typically when a pillion sets, particularly for the girls, they have to put their leg or the feet onto the footrest. Typically, those footrests are normally die-cast or molded footrests with some rubbers on it. One of our customers had a footrest design which requires 5 axis simultaneous interpolation, which is actually, I'll say, the technology required for producing a turbine blade of a aircraft. So this is although it's a low value component, small component, but it's adding complexities because of weight reductions and futuristic technologies, aesthetics. So a lot of new areas are coming. That's the reason we are very strategically shifting towards precision machining in EV, because in EV we can't really make the battery or the electric controller or inverter because it's a hardcore electronic component. But there is a lot of space for the mechanical machining and precision machining components, and where there's a technology, yes, there is a lot of scope. I think we can.
No, Mr. Prateek Kothari.
Yeah.
Can you unmute Mr. Prateek Kothari?
Yes, hi. Am I audible?
Yes, Mr. Kothari.
Yes, hi, good evening. Sorry for that earlier. So my first question, I mean, first of all, congratulations on winning this tier 1 supplier order. I believe we have been trying this for a long time. So just a couple of things on that. One, is this the same one that you were trying a year back and we didn't get the order because of cost? And second, sir, when we shift from a tier 2 supplier to a tier 1, so one, what is it that a customer looks for? I mean, we talked about we are going from a component manufacturer to a some assembly. So what is it that they look for in terms of technical competence? What is it that we are able to bring to the table? And how does our responsibility change versus say supplying to a ZF to now directly to a customer?
I will say, if I say customer perspective, customer's biggest perspective is, can he trust us? Because if we don't deliver, so we maybe deliver a component worth $1 or $10 or $20. And if he loses a car which may be even $100,000 or maybe $200,000. So that is the biggest thing. Customer really takes a holistic view. When we say deliver doesn't mean that only delivering the quantities. Delivering the quantity, delivering the right quality, and delivering the right quality and right quantity at the right time. Now, that is one. These days, the biggest challenge or the biggest opportunities come, how sustainable is the business in terms of environment. So these days, particularly the European OEMs, they have become very, very conscious about choosing a supplier who is sustainable in the short term, mid term, and long run. And when they say sustainable, they don't see only a sustainability of operations. As Prabh explained during the explanation of PPT presentation, that customer also says how strong we are into the human resource management, how strong we are towards onto the environment management, how strong we are towards maintaining the legal, statutory, and regulatory compliances. So, these days, in one of the discussions, our colleagues told that these days, discussion about the product, time spent on discussion of product, 20% time is only the cost. 80% time is the other peripherals, which is mainly on sustainability. So this is how, when customer chooses us as a tier 1, so he really evaluates us. But you can also make out that these kind of OEMs, if they choose us or any other such manufacturer as a tier 1, so they see all the inherent strengths of the company towards the financial strength, technological strength, and the manpower strength. No customer will award you business only if he sees the technology. Because technology, money can buy. Unfortunately, brains cannot be bought by money. So they really see how strong we are into managing our human resources. Now, once technology is there, one human resources is there, third important thing is the managerial professional ethics, managerial professional code of conduct. So, these bigger organizations evaluate all. And we can really say that, yes, if we have been nominated by a pass car manufacturer as a tier 1, so definitely we rate much fairer in their list of requirements or list of their acceptance criteria. And yes, this is a big pride for us to be associated as tier 1, because of course we are working as tier 2 with ZF, but I will say ZF, technically it is tier 2, but I'll say ZF is rather more stringent as tier 1 as compared to major of other tier 1. So even ZF also we consider them as tier 1 only, because ZF as such, per se as a company, I think they are much bigger than many OEMs in the world. So that way, technically we are tier 1 now to a pass car manufacturer, but if we really add ZF, so we are almost 4 years now as a tier 1. So company has really attained this level, not overnight. It has been a long drawn effort and long run team efforts by our all the people working day in day out with the company. I hope I have been able to clarify. Yeah.
Yes. So just one and any more for I mean, how are responsibilities different versus supplying to a ZF versus yours?
Responsibility remains the same. Only thing is there is an umbrella which has been now. There is no umbrella, so we have to always responsibility remains the same. You know, end of the day, if we really don't deliver with ZF, so the same issues are there at ZF also. But between ZF as a tier 1 means directly working with tier 1, so there is always some sort of safety stock at our end, some sort of safety stock at ZF end. So eventually end customer has at least 2 tiers of safety. When we work directly with tier 1, so technically now there is only 1 tier of safety. So we have to be extra cautious in maintaining the quality and the delivery and all other criteria. So we have to be more cautious or planning our activities more strongly.
Correct. And so my second question, we recently went into this liability, where we changed the liability from RACL Austria to RACL India. This was with KTM. So is this a normal agreement that we do with everyone? Why this shift of liabilities from there to the Indian?
I will clarify. You know, this all with, with all our customers, we have the liability agreements. Why this was in case of now GmbH? You know, GmbH is a private limited company in Austria, and European laws are little different. So private, because when you say RACL GmbH means it's a limited liability company. So eventually KTM has a safeguard that if they buy product directly from them, so Austrian company is a limited liability company. So by virtue of their European regulations or the European limitations, they have asked the parent company, which is RACL India, because RACL GmbH is 100% subsidiary of us. So eventually, whatever liabilities over there, the same liability gets transferred to India also. When anything goes wrong, as such, we are liable. But KTM wanted a more transparent document that, okay, legally, because, you know, Europeans always take a very safe course of action. They are saying if something goes wrong at Austria, so tomorrow Austria should not wash up their hands if we are a limited liability company. They say, okay, the parent company from India has to take over the liability. And these liabilities were already, when we were selling directly to KTM, these liabilities were already on us. So technically, it's nothing, it's just a kind of extension of that liability from India to Austria.
Correct. Makes sense. So in the last call in December or November, we spoke about certain delay in ramp ups with our, I mean, the 2 new customers which you added, the MAN and the ZF. Any light if you can throw on that? I mean, are things aligning well toward the?
Yeah, they are doing very well. They are doing exactly as per plan. Prab, if you can add anything to this, the ZF you deal directly, but I feel everything is going as per plan. Or I think, Prab, you were mentioning that some model there is some increased demand also.
Yeah.
If you can verify that.
Sorry, can you repeat the question? I was not paying attention.
No, I was just asking that ZF and MAN, how the business is progressing. I think it's...
Yeah, business is doing fine, doing well. The customer is doing okay. Some of the customers are showing increase. I mean, some of the end customers for our customer, as you know, it has multiple application in different car companies. So some models are doing well, some are not. So at a balance, it is not affecting us. So yeah, so that is doing well.
Correct. So the ramp-up delays which we spoke about in the last call, those are all temporary and transitory. I mean,
Yeah,
seems
those
to be
problems
behind us.
that's all technology. Every machine has come into our factory now. Now we are having a backup capacity also.
Correct. Great. No, great. Thank you so much, sir, and all the best.
Thank you.
Thank you. I think there are no more listed questions, so maybe you can take one or two questions from the public. So if anybody is interested, they can raise hands.
Yeah, I'm unmuting Piyush Jain. He has raised a hand. Piyush, you can unmute yourself. Mr. Jain?
Hello.
Yeah, we can hear you.
Yeah,
Go on.
am I audible? Yeah. Just wanted to check one or two things. First thing, if we can give that number or something, ki how much business we are doing from ZF, or maybe in a 1 or 2 years time we will be able to do. Second, since we're becoming a tier 1 supplier, so does this affect any relationship with ZF? Means I believe earlier we will be doing this business through ZF or something, and if we are becoming a tier 1 supplier for this German car manufacturer or maybe some other companies in future, will this affect the relationship with ZF or not? Because I'm not able to understand this.
It will affect positively. ZF, we are never a threat to ZF. ZF is $42 billion company and we have minuscule business. So we are never a threat to them.
Correct.
More precisely, more better than their other suppliers. Because, particularly from Indian perspective, to be very honest, not many auto component companies are, particularly companies who are not working with European manufacturers. Not many auto component manufacturers will have that kind of understanding of the requirements of the tier 1 companies of Europe. So rather, ZF kind of companies will take it in a positive way.
Okay, and any number on that? How much business we are doing in a maybe FY25 or something years or 2 years time with ZF or something?
These things are little confidential, so definitely one doesn't.
Okay.
Yeah. But otherwise, when the performance gets close, we always share the number. So eventually, previous years, everything is there. For future years, customer-wise, segment-wise, little difficult to disclose.
Okay. Thank you, sir. Thank you.
Thank you. You can take one more.
Rudresh, maybe we can take Rudresh.
Okay.
Hello, am I audible?
Yeah.
Yes.
Yeah. It was with respect to parking lot mechanism. Is it fuel agnostic or what?
Sorry, can
Parking lock mechanism, is it fuel agnostic?
Yeah,
This is particularly for electric vehicle.
Okay, so you meant to say that we can't leverage that mechanism and use it in the IC engines, right?
This I'll have to ask the customer. But in any case, the nomination, any product when the customer designs, they design for a particular brand of vehicle. In an ICE engine, parking lock mechanism will be different because ICE engine has a very full-fledged 8-speed, 10-speed, 9-speed gearbox. So park lock mechanism will be inside this. We do some park lock mechanism for parking lock wheels for ICE engines. But of course, this design is for electric vehicle only.
Okay. Thank you. And one more thing on the geopolitical tensions which we are seeing in the Middle East. So does it affect us in any ways?
It's increasing the lead time, so obviously disruptions, some extra materials to be rushed. In the short run, it is an advantage that we have to rush extra material to Europe. So definitely we'll get some benefits, and some stage geopolitical tension will get resolved. So then maybe, because about 2 weeks of transit time has increased. So this 2 weeks of extra some materials some customers are demanding, some safety stocks are reducing. So we have to replenish the safety stocks. So these kind of disruptions are there. So I'll not say it will affect business in a big way, but yes, some temporary local disruptions will happen, and this we are taking care.
Does it affect our growth guidance which we are giving?
Sorry, question is not clear.
No, see, you said that we are giving a 2 weeks heads up. So what I meant is, does the tension in the Middle East affect our growth guidance, or is it?
No, growth guidance will almost remain the same. Only thing is, we always have in Europe safety stocks of 4 to 6 weeks. So technically, this 2 weeks delay will reduce the safety stocks by from 4 weeks to 2 weeks or 6 weeks to 4 weeks. Then eventually we have to replenish the stocks. Growth will keep on doing it, but sometimes Europeans are buying too many things from China and from Asia, and if anything gets delayed and the line stops, so eventually everybody will get suffer. But eventually, big OEMs, they know how to manage their difficulties.
Some of them, just to add, are also picking up material via air, and still they are not saying no to put material in the sea. So of course, what they're doing is they're doing contingency. If the ships are delayed, then at least they're picking on air. So as sir said, sometimes it is helpful that maybe we are sending more because of this crisis. But in the long run, of course, when the sea shipments start reaching, there some correction might happen, but there is nothing which is major going to affect.
So last question, coming back on the parking lot mechanism. So are we the only bidder, or how many competitors were there? And can you throw some light on the competition?
It was a global bidding, sir, not only RACL. The global bidding between China, India, and many European companies. And from China, how many suppliers? Yeah, it's a global bidding. So obviously those numbers are not known to us, but it's not that we are the only bidder. But yes, now I can say with pride that we are the only supplier for this mechanism.
Okay. So it's an exclusive agreement with the.
Oh, yes. It's very, very clear because have you attended our calls earlier also, or it's your first time you're attending this call?
No, I attended in the past as well.
Okay, so just to explain you, our business model is such that whatever product we supply to our overseas buyers, this is whatever product. I say it's not a product category, but a product. It is always as a sole supplier, and the agreements are always long-term agreements. They are linked with the project shelf life. If project is for 2 years, it will be for 2 years. If project is for 10 years, it will be for 10 years. So this is our business style of business.
Okay, thank you.
Okay, so there are no more hands.
I think there is one more hand, and then we'll finish this.
Mr. Aditya Pal, can you unmute yourself, please?
Hello, all. Am I audible?
Hello.
Yes.
Yeah.
Yes, you are.
Perfect. So just one small question on the parking lock product. So this design will be owned by RACL, and this can be scaled up to other customers as well, right? Other manufacturers.
No. Ours is only built to print design. It's a concurrent engineering for the exclusive specific customer. Because
but we can do it for other customers as well.
No, we cannot. The basic design is owned by the customer. We have worked with them as a concurrent engineering. These days the concept has come, what we call it concurrent engineering. The basic design will be developed by the customer, and then we have to add value to make it manufacturable and to make it cost competitive. So that inputs we are given, but that is the USP for getting nominated this project in a global bidding project. But eventually this ownership of the design remains with the customer, not with us.
But say for example, then there'll be other manufacturers who will be having parking lot designs. They can come to you and do concurrent manufacturing with you as well, or you have a non-compete sign with this customer?
That we are free to work with anybody. Yes, there is no such non-compete agreement.
Okay, understood. So that was it from my side.
Thank you.
So I think that's it.
Yeah.
Okay. So Jitendra, then you can make a vote of thanks to all.
Yes.
If anyone has query.
Yes.
So if anyone else has any other query, you're requested to send us an email and we will definitely reply back to you on the same. So thanks a lot, everyone. It was a very heartening response from everyone, as always in our investors call, and we will keep on updating any further developments as we keep on doing. And thanks a lot, and stay safe. Please be in touch. Thank you. Thank you.